US stock market tanked on 27 January 2025. The Chinese AI startup DeepSeek triggers the sell off in the US stock market, especially the tech stocks, as the new model threatens the dominance of the US in this field. So, as a result of this, global stock market are witnessing sharp divergence as the Chinese artificial intelligence startup DeepSeek shakes up the tech world with its groundbreaking product release. Was it an overreaction of the market, or it is a correction which should worry traders and investors in the stock market? So, in this video, we will undertake the valuation analysis of the US stock market, and we will check the potential growth forecast for US stock market, especially the top two sectors where the growth potential is higher in 2025 as per the forecast. That will help us to position ourselves in the market, because if earnings are growing, then probably those sectors may be good, because ultimately the stock market is the slave of earnings. I am D K Sinha. Don't forget to like this video, subscribe the channel, hit the notification bell. So let us start with the valuation analysis, and then we'll go to the price chart to undertake the technical analysis to understand the sell-off is a buying opportunity or it's a matter of worry. We'll first take the US market analysis and valuation. And let me first emphasize that during this analysis, we are considering the aggregated company financials that covers the broader US stock market, covering 7,699 companies. So it is an analysis beyond S&P 500. As for the past 12 months, the market is up by around 25%, and earnings are forecast to grow at 15% per annum. So, if you look here at the P ratio, currently the P ratio is 32.2 of the broader US stock market, and the 5-year average stands at 31.3. So, slightly P ratio is above the 5 years median. But if you look at the same data of 3 years median, so 3 years median is 27.2, while current P ratio is 32.2. So yes, market is a little over expensive. But if you look at the earnings, the earning, there was a dip in the earning, and we have seen a massive correction in the US stock market. In fact, it was a bear market in year 2022, and then in earning has started growing, and it is growing. So there is a positive trend in earning growth. Similarly, if we look at the revenue growth, so the revenue is also growing consistently. So this is a positive news. Investors seems to be quite optimistic on American market and appear confident in strong long-term growth rates. The market is trading at P ratio of 32.2, we have just seen, which is higher than the P ratio of 3 years. If you look at the past earning growth, the earning from the American listed company have grown by 2.5% per year over the last 3 years, and revenues have grown over 5.8%. So the earning growth forecast of 15% is higher than the past earning growth. Let us now look at the valuation analysis. If we look here, the current market ratio, P ratio is 32, US market, and earning is forecast to go at around 14.7% to 15%. Which are the sectors which are likely to go faster than the US stock market? First is the healthcare industry, where earning growth forecast is 18.8%. Then we have tech industry, tech stocks, earning growth is 18.8%. So certainly these two becomes the top two sectors in the US stock market. of which the earnings might outperform the broader US stock market. And other sectors are also there. Consumer discretionary is likely to grow at 16.8%, which is also more than the broader US stock market. Material 16.4%, and telecom is more or less at par with US stock market. So these are the earning growth forecasts. So we will focus on technical analysis of healthcare industry and tech stocks. This is S&P 500 index in daily time frame. What has happened on 27th of January when US market tanked? It opened gap down, and then what has happened? There was no follow through. Market opened at 5,969. It made a low of 5,962.92, and then finally closed at 6,012.28. What does it indicate? That there was a panic selling in the market, but ultimately the smart traders or investor started buying it. So in the process, what has happened? It filled this gap, and there is one gap which is remaining, becomes the very strong support in the US stock market. Let us further understand the price action. This is the support, support. So it is a higher lows kind of market structure. This was the counter trend line which was acting as a resistance. There was a breakout over here. So obviously the zone between these two trend line is an important demand area. So 5871, which we discussed earlier also on this channel, will provide a good support to S&P 500, and this gap itself is a strong support of the market. Now, since the price has taken support at EMA 21, and if there is a follow through of the high of the last candle, which is at 6017.17, so market may resume its uptrend, and there could be a formation of a cup and handle kind of chart pattern. And so cup is in place, probably this could be the formation of a handle, and once it gives a breakout, so this gap which has been created will act as a supply area. Once this gap of 6051 to 6093 is taken out, what could be the potential target for S&P 500 index? The next potential target would be to 6280. So there is no change in the market expectation. If we see the market from long term perspective, yes, there was a panic selling because of the news relating to new AI model developed by the Chinese startup, that is DeepSeek. Now let us look at the tech stocks which were badly affected on 27th of January. This is the price chart of Nasdaq 100. So what has happened here? Market gap down, opened, formed an inverted hammer kind of candlestick pattern. So the market opened at 21,000. It made a low of 20,974.9. So there was no follow through on downside, and market ultimately closed higher at 21,127.28. So from opening to closing, in fact, market was bullish 27th of January. Now, in the process, what we can see here is overall structure. See the price support. See the price support. We can even scroll back and see the earlier price action. Price has taken support here. Price has taken support here. Price has taken support here. And finally, the price closed quadrant proximity during the gap down opening of the market on 27 January. And from there, the buying has come. If you look at the counter trend line, price has taken resistance, multiple resistance can be seen. So this trend line is acting as a support. So zone between these two trend line, of course, there is one gap which worries me at 20,249. So finally, the long-term support is 20,249, which has a confluence of SMA 144 as well. But there is no change in the market expectation after this particular news of a new AI model developed by the Chinese startup. So, what could be the potential? Now, there will be certainly a resistance here at 21,620 because there is an existence of a gap. So, this entire gap area will act as a resistance from 21,300 to 21,620. But once this is taken out, here too we can have you can imagine upcoming cup and handle kind of chart pattern, and this is the cup in place, and once the handle gives a breakout in price action, then what could be the next potential target of Nasdaq 100? I'm talking about the tech stock now, which has a good earning growth forecast as well. So the next potential target could be to 22,900 to 23,000 level. So there is no change in the market expectation as which is evident from the price action. Now let us look at the pharma sector. Pharmaceutical industry has a good growth. Let us look at the monthly price chart. What we can see in this price action, that this trend line is acting as a support. This is acting as a support. So the price is not away from the dynamic support area with a confluence of EMA 55. What it has done in the process, it has formed the double bottom over here, gave a breakout over here, and attained the first target of 61.8%, and then this correction started. There was a very long term consolidation here, then it was a breakout. So on a trend resumption, the next potential target could be to 1792, and currently it is trading at 1481. So pharma sector is looking good, and we have just now seen that there is a good earning growth possibility in this particular sector. Now let us have a look towards the some of the tech stocks in the US stock market that were badly affected after this news of new AI model. Nvidia. Let us see the Nvidia in daily time frame. What it has done here. There was a gap down opening, and there was a severe drawdown on a single day of 27 January to an extent of 16.97%. So nearly 17% the stock had fallen. But what we can see here is price has taken support here, price has taken support here. If we scroll back a little back, then we can find yet another support on the price chart, and this is yet another support. So we can see the multiple support. Now, if we extend this trend line, which is acting as a dynamic support, so there is a breakdown. There cannot be denial that there is not a breakdown, but this is not a decisive breakdown. The volume is very high because it was a panic selling. So possibility of a bounce back when the market opens on 28th January cannot be ruled out, because the price is currently trading as SMA 233, and if we see the double top formation and breakdown over here, then the first target was arriving at 115.8. It has made a low of 116.7, and if we calculate the 100% expansion, it may fall to 103 level, 108, and then 103 level. So virtually speaking, this area where the price has earlier taken support, 102 to 103, in my opinion, looks a good buying zone for Nvidia stock. There is no change in the market's expectation. Still, the trend is bullish and the overall structure is bullish. Yes, there is a minor distribution pattern which has given a breakdown, and once the price enters into this territory, there will be an upside momentum developing in Nvidia stock. Let us check another stock, Google, Alphabet. Google is another stock which fell. What we can see here is this stock also gapped down and ultimately formed inverted hammer kind of candlestick pattern, and the price was already consolidating in this particular range. This was the area of resistance, so this becomes a good support. There is a gap existing over here at around 178. So 178 is a very strong support, but even before that there are multiple support at like you see the candle of 20th December. It was a gap down opening and a buying came after the gap down opening. So the low of this candle is $186. So 186 is the intermittent support in Google stock. So there was a gap down opening even in Google or Alphabet stock, but there was no follow through. This kind of news of new AI model, which has been developed at a throwaway price of $6 million, could even help a company like Google, which has a very ambitious capex plan. Now, capex, if you see, has grown by around 55-60% over the past 1 year in Google. So there, and majority of the capex is going to AI development. So maybe the cost may reduce if there is a cheaper alternate now available in the market, which might benefit in the long run to Google. Now let us check one more stock, Microsoft, which has also fallen on that date. So Microsoft Corporation. What we can see here, once again, there was a gap down opening. And what has happened? There was no follow through after gap down opening. Price took support in the multiple moving averages zone like SMA 200, SMA 233, SMA 144, and short term moving averages like EMA 21 and EMA 55. The gap down opening price was $424, low was 423.5. So there was no follow through. And finally, the stock closed at $434.56. We can see the formation of a massive bullish candlestick pattern. And this is trading in a rising price channel. Price has taken support here, price has taken support here. So this trend line is a very, very important support area. If we summarize the analysis which we have done today, the first thing we come to know is there are top two sectors, that is pharmaceutical industry and tech stocks, are likely to outperform the broader US stock market in terms of earning growth, and they are trending up also. So the momentum is good and earning growth potential exists in these two sectors. So these could be the sectors for 2025. Now, as far as severe fall in the US market is concerned, on 27 January 2025, it seems to me like a panic selling because the market gap down, ultimately there was no follow through on downside and the market sharply recovered. What is your opinion? Was it a panic selling or there is a some fundamental or change in the market expectation? Your comments are welcome in the comment section of this video. Thank you very much for watching. Looking forward to meet you very, very soon.